Hello, students. You are all welcome to this great and beautiful week. This is the fifth week of the third term, and today we'll be looking at the topic that says subsidiary books and source documents. We'll be looking at subsidiary books and source documents. We will be revising on this topic because this topic was treated when we were in 10th grade. So we'll be revising this topic this week. Alright, it's expected that by the end of the lesson, you the students should be able to list and explain the types of books of account, define source document, and then identify the subsidiary books and source documents. Over here we have the two types of accounts. One, we have the ledger, which we say is the principal book. The principal book is the ledger. It is the final destination of all transactions in the subsidiary books. The final destination of all transactions in the subsidiary book. Alright, and today this is our main focus. We'll be focusing more on this, which is the subsidiary book is one of the two accounts. This is a book of original entry. The book of the subsidiary book is the book of original or prime entry. They are used to make first entry of transaction. All the subsidiary books, they are used to make first entries of the transaction. Before any entry can be made in the ledger, it must first be recorded in the subsidiary book. Now let's talk about source documents. What are the source documents? Source documents are the original record which contains the details that supports a transaction that will be entered in an accounting system. That document that contains the details, the dates, the product, the name of the product, the address, the signature, the quantity of goods, the total amount, and the total amount, and so on. Those ones are those things are said to be the source documents. And over here we have source document listed. Number one, we have the invoice. The invoice sets out the full details of goods sent by the supplier to the buyer, stating the quantity, the price, the discount given, and the terms of payment. It is in the invoice that you get the quantity of goods that sent to the supplier, the price. If there is anything like discount that was given, it will be recorded there. The terms of payment, if the payment will be made instrumentally or will be paid once. After that, we have the debit note. We have the debit note. Debit note is a document sent by the seller to the buyer to correct an undercharge. If there is anything like undercharge, maybe some goods were returned after buying, you returned some. So debit note will be sent to you to correct an undercharge, and then write and give you the correct amount you are supposed to pay. Alright. Now the next one is a credit note. The credit note is a document sent by the seller to the customer for reduction in the amount owed by him. The credit note is sent by the seller to the customer in order for reduction in the amount owned by him. It arises because some goods are damaged as well. So we have credit note received by suppliers, and we only have credit note issued by customers. Now I want you to look at this. The next one is what? The petty cash voucher. The petty cash voucher. This covers payment credited to the petty cash book. All the payments credited, the payments we record in our cash book, all those petty expenses, all those small expenses that you incur in your business. Instead of you going to record it in a big book, you make out a petty cash book where you record those small expenses. Alright. Then we have statement of account. Well, this is a document sent by the seller to the buyer at regular intervals to show the money you are owing, the ones you've paid, just like a bank. Just like a businessman can collect his statement of account from the bank to know how much was paid in, how much was received, and so on and so forth. All right, now we keep moving. We'll go over to the divisions of subsidiary books. These are the subsidiary books we have. We have purchases day book, we have sales day book or sales journal, we have purchases returns or return outwards day book, we have sales returns or return inwards, we have cash book, and we have general journal. So we'll start from the first one, which is the sales day book. Sales day book. This is a book of original entry in which credit sales are recorded before posting to the ledger. It is the book of original entry where we record all our credit sales. All our credit sales. I said credit sales. Credit, that means those sales that were made, and the customer did not bring money along when he or she was coming to buy the goods from you. All the credit sales are recorded in the sales day book or sales journal. Now to the purchases day book. This is a book where we record all our credit purchases, all the purchases made on credit. Remember, some people normally use goods bought on credit, but we use purchases because we buy to resell. That is different between bought and purchases. You purchase good, you use purchases when you buy to resell, but you use bought when you buy for personal use. All right, the next one is purchases returns or return outwards day book. Purchases returns. This is a book where we record all the goods we return after buying them. All the goods. Sometimes you can buy your goods and then you realize that this product is not what I want. I don't want this color. I don't want this shape. So therefore, I am going to do what? I will return it to the buyer. I will return it to the seller. So this is a book of recording goods returned to the suppliers as a result of one reason or another. All right. Now the next one is sales returns or return inwards book. Sales returns. Sell, just the opposite of purchases returns. Sales return journal. The sales return journal is used to record goods returned by customers. Just like we use purchases return to record the goods we return to suppliers, we use sales return or return inward day book to record goods returned by our customer. It may be due to wrong color, I don't like this type, inferior quality, or damage. Anything can cause goods to be returned. All right. Now we'll move to the next one there, our general journal. This is another book of prime entry in which we record the initial entries in chronological order. It can equally be seen as the daily record of a transaction. We record the daily entries, the way it happened, the day by day, how it happened, the first sales, the second one, the third one, how it happened, and then we record the dates. We record the one of today before we record the one of tomorrow. All right. Then the last but not the least, we have our cash book. Our cash book is a double entry account used to record cash transactions and also transactions. We use cash book to record cash transaction and also transactions with the bank. Record the cash transaction, your cash sales, your cash purchases. You receive the money, you give out money, everything that concerns cash is here. Remember, sales day book is for credit sales, purchases day book is for credit purchases, and then purchases returns is the book we record the returns we made to our suppliers. Sales returns is the book we use to record the returns made by our customers. General journal is a prime entry where we record everything that happened according to the way it happened. All right. I want you to please try and do the assignment attached to this and then submit. Now, if you have any question, don't forget to ask. Send your question via message and I will be glad to give you answers. Thank you very much and have a nice day.